Well, hello everybody and welcome to this webinar and online presentation by Origin Financial. This has been held in association with the Charity Trustees Investors Association. The topic of today's presentation is looking at how charities and non-profit organisations can protect themselves against the unforeseen loss of key personnel or key people working within their organisations. In today's agenda, I'm going to share with you some results from our recent survey. I'm also going to share with you some statistics that look at the chances of losing a key person. I'll explain what the potential risks are to an organisation, things that you should consider when reviewing your risk management strategy, how to identify people within your organisation that are key to the continued success of it, and I also want to explain about the services that Origin provide and how we can assist you to implement a suitable solution to cover those risks. So first things first, to look at the survey. This is a survey that was conducted online. We invited just over 500 charities to take part. We actually managed to get 70 organisations to respond. And the first thing that we wanted to identify was, does your organisation currently have some form of insurance in place to cover you in the eventuality of losing a key individual? What the results came back with is that actually 87% of charities and non-profit organisations that responded didn't have any insurance cover in place, with only 13% having insurance cover in place. If you wanted to have a look at this survey, by the way, there is a link here at the bottom of the screen, or if you type into Google research poll for charity key people, I believe we're on page 1 of Google, and you'll be able to have a look at the questions that were asked in this survey. So what I want to do now is just break down this 61 and 9 down into, give you a bit further detail. So of the 61 organisations that didn't have any insurance cover in place, interestingly 60 of those organisations had actually identified the risk of losing a key individual and had put that on their risk register. Now, for those people listening that aren't aware, the Charities Commission do advise and recommend that it's good practice to maintain a risk register within your charity, and on their website they supply a templated example of the type of things that you could consider including on your risk register. One of the areas on their templated example does actually cover the loss of a key person, but the way that they've explained it, it's when a key person hands in their notice and terminates employment and the charity is faced with having to replace that person. Now, we see this as a foreseen loss of a key person. What we're talking about today in this presentation is the unforeseen loss of a key person. So it's, should one of your key person suffer from a critical illness or die and you have an immediate need to replace them that was unforeseen, what can be done about this? So just going back to the survey, of the 61, 34 of those people that responded were actually unaware that this type of insurance existed. 7 believed the cost was prohibitive. One of the organisations hadn't identified who their key people were, and 2 didn't have the cover in place for some other undisclosed reason. The 9 organisations that had cover in place, 5 said they had cover but only for some key individuals, 2 said that they had cover and it was for all individuals, and 2 organisations said they had cover in place but they hadn't reviewed within the last 2 years. So that was the result of our survey, and actually it wasn't too different to what we expected it to be. We did feel that there would be a gap in this marketplace and that the general awareness of this cover would be fairly low. So the next thing I want to look at is what are the statistical chances of losing a key person. And if you're listening today and you are responsible for managing and assessing the risks that your organisation is exposed to, I think it is important that you are aware of these statistics and the chances that you are exposed to. I'm aware that probably a lot of you will have come across similar sort of statistics in the past, but I think it's still worth recapping on these. So in the UK, you have a 1 in 3 chance, or sorry, 1 in 3 people will develop cancer during their lives, and 1 in 4 people will die from it. In the UK, around 1 in 5 men and 1 in 6 women will die from coronary heart disease. Someone has a heart attack in the UK every 2 minutes, and in the UK, 1 person has a stroke every 5 minutes. So this is research that's come from various different organisations that are detailed below, and I'm sure that many of you have heard similar statistics in the past. What I now want to have a look at is some statistics that directly relate to people of working age, and what we've done is looked at the age range of between 30 and 65. Now we've got some more statistics here. So you've actually got a 30 to 1 chance of dying between the ages of 30 and 65. A 7 in 1 chance of being diagnosed with a defining critical illness within that age range. A 3 in 1 chance of being able to claim at least once from an income protection plan within that age range. And probably most worrying, a 2 in 1 chance of one of the above happening within that age range. I'm sure if you are, as an individual that is responsible for managing and assessing risk within your organisation, those statistics will be of interest to you. So moving on, what are the likely risks that could your organisation be exposed to in the event of losing a key individual? Well, certainly, I should imagine there's going to be a pressure on the remaining employees to fill that gap and meet the immediate workload. However, if it's somebody that is responsible for fundraising or income generation, potentially there's a risk that your organisation could see a fall in income or fundraising. If the key person is responsible for a particular project or research plan, it's potential that those plans may have to be put on hold or even lost altogether. If you're looking to replace the person that you've lost, certainly there would be replacement costs, whether that's placing adverts in the local press advertising the position. That could be training costs to reskill people already working with your organisation, or it could be recruitment costs through a recruitment agency. Obviously, should you see a drop in income or fundraising ability, that might have a knock-on effect where there's an inability to meet certain expenditure or meet certain contractual obligations if it's an individual who's responsible for project delivery. You may lose a key person that's actually involved with the day-to-day delivery of your charitable services. Obviously, if you're a smaller organisation, that might mean that you have an inability to deliver those services. There may be certain individuals within your charity or organisation that are responsible for maintaining contacts with corporate sponsors or local authority or central government. So there's a potential risk that those relationships get damaged or they're harder to maintain if you lose a key individual. There's certainly going to be loss of skills or expertise and experience, and that could have a knock-on effect where there's a loss in staff confidence within the organisation, or in some circumstances there could be a loss of donor confidence, and in turn that could lead to awkward questions being asked. I know when we've spoken to certain individuals and some corporate sponsors, there was an assumption that certainly they believed charities would automatically have this cover in place, and obviously from what our survey indicates is that that's not the case. So those are some of the risks that your organisation could be exposed to. What are other things are there to consider when you're assessing your exposure to risk and looking at the contingency plans that you could make? I think the first question to ask is, could or would your organisation survive if it did lose one or more of its key directors or key individuals? Would there be an impact on fundraising or income? And how long could your organisation survive for? Would you need to recruit a replacement, or could others cover the work and be retrained internally? You need to work out how much money the organisation would need, how quickly it would need that money, and how long it would need that money for. So how do you go about identifying key people within your charity or organisation? Obviously, the first thing to do is think about those individuals that do have a direct effect on fundraising or income generation. However, also then look at the individuals that maintain those vital contacts with third parties or corporate sponsors, or with contacts at local government. Look at the people that carry out a vital function within your charity, and that could be a research function or somebody that is, as I said, involved with the day-to-day service that your charity provides. You may have key individuals that play a pivotal role in a major project, and there might be certain contractual obligations that's placed on the delivery of that project. Also think about anybody within your organisation that may have a bearing on the credit rating, either with your bank or with a sponsor. You know, these are the people that are absolutely core to the success of your charity, and these are the people that, you know, if you did lose them, there would be a major impact on how your charity or organisation were able to operate immediately after that loss. The next thing you need to do is obviously calculate the sum assured, or the level of cover that you'd need for each of those individuals. For certain roles that might be easy to do, so obviously with a fundraising role it might be quite easy to look back over the last 12 months and calculate exactly how much an individual has brought in as income to your organisation. For others, you have to follow a more structured approach and work out the sum assureds for different levels of risk. What I would say is that as a firm of independent financial advisors, Origin do provide a contingency planning audit, which will enable you to sit down and assess the risks that you would be exposed to should you lose one or more of your key individuals or key people. We can help you carry out the assessment on your risk register and help you with the wording that we need to go in there to document and record any plans you would implement that would help mitigate that risk. Obviously, insurance cover is there to provide the money to your organisation to meet the unforeseen expenditure or loss, but whatever sum assured you do choose, it does have to be able to be justified to the insurer, so you can demonstrate that yes, this is unforeseen expenditure or this is a loss of income and we really do need the money to prevent against that risk. Currently, Origin are offering a free consultation at no risk and no obligation to yourselves, where we would come out, have an initial discussion with you, help you get to grips with your current position. If you have cover in place, we can help assess whether that's still suitable, or whether the sum assureds need to be altered, or the terms extended, or even new employees or key people added to your cover. If you don't have it in place, we can step you through a structured process from start to finish, help you identify all the stages to put in place and implement a suitable solution. That really concludes the end of my short presentation here. What I'd like to do next is throw the conversation open to questions. If any of you do have any questions, You can either use the chat facility that should be showing on your meeting toolbar on screen, or you can speak out and I'll repeat the question because other people won't be able to hear the questions. So does anybody have any questions? Okay, so I can see that somebody's starting to type a question. We'll just give them a couple of minutes. Okay, so we have a question here that says, does this insurance cover the charity in the event that somebody gives notice of employment? The short answer is no. This insurance cover is there to provide against the unforeseen loss of an individual. So that would be obviously sudden death or somebody diagnosed with a critical illness. It wouldn't cover you when somebody gives notice of terminating their employment, as that is seen as a foreseen loss. However, there are steps you can take within your employment contracts, and probably a good course of action there to speak to your employment lawyer or solicitor on how you could work those contracts and then record that in your charity's risk register. We do have another question that's come through saying, does this type of insurance only pay out on death? I think I've just mentioned there that the cover can be arranged on a death basis, but it can also cover some of the some critical illnesses. Obviously, the main three critical illnesses are heart attack, cancer and stroke, but there are a defined list of other critical illnesses which will vary between the different insurance companies and providers. And obviously, as an independent advisor, we can help you review the different contracts that are available within the marketplace to help you find one that you feel is most appropriate and competitive. Does anybody have any other questions? Okay, we've got one more question that's currently being typed, I see. Okay, somebody's asking, what is the cost of this type of insurance? Well, obviously the cost of the cover will vary between the different criteria, and obviously the cost is calculated on the age of the individual and also currently on the gender of the individual and the term of the contract and the type of cover that's put in place. To give you an indicative quote, this is based on one we've done just recently. So for a male employee aged 40 with a sum assured of $250,000 over a period of 5 years, this would, on a death-only basis, cost somewhere in the region of about £18 per month. Obviously, there's a number of different providers. Hopefully that will give you an indicative cost. One thing that I will just mention, I did talk about that the price is currently based on one of the factors is gender, so there is currently a different pricing for male and females. Some of you may be aware that later on this year the EU Gender Directive will come into force, and after the 21st of December insurance companies will no longer be able to price insurance cover based on gender. Now, what that means in terms of insurance premiums, many speculate that the insurance cover will increase in cost rather than balance out equally. So if this is an area of interest and you are looking to put cover in place, I would urge you to have a look at getting that in place before the 21st of December, as it's likely to be, you're likely to be able to get that cheaper now than after that date. Are there any other questions? Okay, it doesn't look like we've got any more questions for anybody. I hope that you found the presentation of interest today. I'd like to thank you for your interest. If you do want to speak to me or a colleague to follow up on any questions you might have following this event, the free phone number is on screen now, or you can reach us at the website, which is www.untitled origin.eu.com, and if you visit our events page, we will have details of up and coming future events that may also be of interest to you. Okay, thank you very much.